I want to say thank you to Director Dunning. Director Dunning, as you know, was the new chair of the NAIC's International Insurance Relations Committee. And the very reason we chose him for that position is that he could serve as the MC for this event. Yeah, if he weren't a commissioner, he could be doing game shows in Hollywood. The guy's great. But it is my honor to welcome you to the NAIC's flagship international event. And when I say flagship, I am so pleased to be able to announce that once again, this was such a hot ticket. It sold out only 6 days after opening registration. We had a huge waiting list. Taylor Swift called. She couldn't get on, so we're good. But today we've got 269 registrants with speakers from 6 continents and attendees from 19 different jurisdictions, reflecting the timeliness and the importance of the issues we will all cover. There is plenty to discuss, we know that. But our forum never lasts long. It's just a day and a half. And we do our best to cover the key issues facing our industry. And for this event, our agenda is wide-ranging. The topics we will cover include AI, machine learning, diversity, equity, and inclusion, the investment landscape, proactive solutions to strengthen climate resiliency, and the International Association of Insurance Supervisors strategic plan for 2025 to 2029. And with speakers from around the world, we are ensuring that the perspectives are not just limited to the US. We are capturing a global perspective because so many of the risks that we share are global. But while the topics are diverse, there is a single focus, and it is the theme for my term as NAIC president. Now, I don't usually come up with good ideas, but I'm really great at stealing them. And the idea that I stole came from the London Underground, and it was mind the gap. And I previously defined the basic idea of closing protection gaps as ensuring that as many people as possible have access to as many products as possible without any unnecessary barriers. This is an ongoing mission. We're not going to check that off today. We're not going to check it off after one event. We are not going to check it off after 1 year. It is a journey that we must embark on. But our collaboration today, tomorrow, next week, next year, and for the people younger than me, the next decade, will help to support this long-term vision by helping us educate more consumers and create a supportive and, yes, an innovative regulatory environment. These are the steps that we need to take in order to help close that gap over time. And as we survey the current environment, it's not a surprise that climate risk ranks high on the list of the most pressing concerns related to gaps. The increasing frequency and severity of natural disasters reaches across jurisdictions and borders. It touches all of us. You've seen what's happened in California. You've seen what's happened in Florida. But let me tell you this. In Connecticut, it may be not as loudly spoken about, but we're all seeing the same issues. We as insurance regulators all have to address the same issues. We have to make sure, going back to filling in that protection gap, we have to make sure that our consumers, the people we are sworn to protect, have access to the products that provide that protection as easily and as affordably as possible. And when it comes to climate risk, which may be one of the defining issues of our time, this is why the NAIC adopted its first ever national climate resilience strategy for insurance, blending regional perspectives and coordinating action. It's a data-driven strategy that prioritizes pre-disaster mitigation while formalizing resilience actions that can be coordinated by the NAIC both before and after a disaster. The goal is to drive faster and more effective risk reduction to protect the most people. Risk reduction, risk mitigation. You know, there are some things we know we have to, as the climate evolves, we have to address it. How do we do it? We want to make sure that homes are more resilient. We want to make sure that properties are better protected. And that's why this strategy that we recently unveiled focuses on 5 actions. Closing the gaps, not surprisingly, and that includes launching a comprehensive NAIC climate risk dashboard to understand existing protection gaps, identify where they're widening, and to inform state-specific priorities. We have to build a blueprint for the future of flood insurance. We have flood insurance. We don't necessarily, right now it's largely a government enterprise, and it's dependent on the funding being renewed. What do we do? How can we use flood insurance to help improve resiliency? We need to define that future. We also need to know what is going on here, there, everywhere throughout the United States. We need to have comprehensive information and data that we can use. And that will come through, and I'm going to mention 2 particular items here. The NAICs, as I'm sure you know, we have the Center for Insurance Policy and Research, which is our in-house think tank. And that organization has created a CAT modeling center of excellence because we know that past performance when it comes to climate no longer guarantees future results. We've all seen the numbers that NOAA, National Oceanic and Atmospheric Administration, will show. The number of billion-dollar disasters keep just increasing year after year. We know we can't rely on the past. We know we need to use models in order to accurately predict the risk that industry and consumers will face in the future and thus accurately price for it. And the CAT Modeling Center of Excellence will provide the support to regulators across the country to be able to evaluate these models. Second part of that focus on data, you may have heard of the Property and Casualty Market Intelligence Data Call that we recently issued. We've issued that to ensure to regulators representing more than 80% of the market. We've got close to 80 different areas that they will respond to, 80 different variables. And what we are hoping to do, what we expect to do through this, is to understand our market nationally, understand the impact of the changes that we're seeing nationally, but also locally, because we are state insurance regulators. And sometimes even the state is too big. We need to know what's happening within a few hundred feet of the shore. We need to know what the emerging risks are. We need to know what the concentration concerns are. We need to be able to help address those and thus ensure that that coverage gap is not increasing. And that's the main reason we've issued the PCMI data call. We're looking forward to beginning to share the results of that data call sometime later this year. Another item on our list in the strategy is to create and coordinate new resilience tools. And finally, we need to test climate resilience scenarios. All of this, if you see the common theme, it's all fact-based, it's all database. It's all working together to figure out what's happening and what we can do to ensure the market remains a viable market, because competition protects companies, but even more importantly, strong, vibrant, competitive market protects consumers by ensuring that the products they get are priced to fit the need, are priced to meet the risk. I'm just looking at some of the people that I can see here. I can barely see through the lights, but I can see some faces. And the need to address protection gaps crosses borders. And as I look at some of the tables, I see some of my friends, some of my international colleagues. And we at the NAIC, we collaborate with those international colleagues through various organizations, including the IAIS, as I mentioned, the International Association of Insurance Supervisors, whose Secretary General Jonathan is here, and we'll be hearing from him soon. The OECD, the Sustainable Insurance Forum, and through our bilateral efforts. Technology represents another gap for insurance supervisors. We are frequently playing catch-up to the industry's technological advances. Technology represents such potential in its ability to aid consumers with new, dynamic, innovative products. Parametric insurance, for instance, is one. But we also recognize that our responsibility as insurance regulators in the U.S. is to oversee it responsibly so that consumers, again, benefit, that consumers profit from its use. And one example of this is the NAIC's recent AI bulletin, and that was approved in late last year at our meeting, and it explains how state authority applies in the context of insurance or insurers using AI. This bulletin came about through years of interactions with our colleagues, both domestically and internationally, in conferences, forums, meetings, roundtables, a couple of bars. But we had lots of discussions, lots of input, because that is how the NAIC operates best. And NAIC members will continue to participate in numerous bilateral and multilateral work streams on this topic, because one gap we certainly want to avoid, we certainly need to avoid, is the innovation gap. Now it's May. I'm a little stuffy here because it's spring in DC and they've got lots of flowers out. But it's great to be here in DC. I know the DC commissioner is back there somewhere. I can see her in red. Thank you for hosting us. Going back to last month, April, that was Financial Literacy Month in the US. And while it is great to have a dedicated time to highlight this critical issue, closing protection gaps means it must be an area of attention year-round. Insurance provides a foundation for sound financial well-being, and better educated consumers who understand the purpose, the value, and the extent of their insurance coverage and are equipped to confidently shop around, make for stronger and healthier markets, households, and communities. Taking steps such as ensuring policy materials and contracts are in plain, easily understood language, especially for life annuities and other complicated products, means greater access for a wider audience. As such, the NAIC and the 56 jurisdictions, the state insurance departments, provide a host of resources meant to break down complex topics into measurable action items. And through initiatives including the NAIC's 3-year state-connected strategic plan and other efforts, we are seeking to use technology ourselves to maximize the information and the tools we offer consumers. Using the latest channels, the latest data, the latest technology, we can help level playing fields. We will reach further and faster than ever before to bridge the gaps, to remove barriers, to expand opportunities, especially for underserved and minority communities. We work to make sure our message on closing the protection gap is not only amplified across the states, but also at organization and amongst our counterparts at the international level. And over the past 18 months, for example, the NAIC has actively participated in the Protection Gaps Task Force at the IAIS, contributing to the report that organization released last November on insurance supervisors addressing NatCat protection gaps. We look forward to working on other outputs that focus on equipping supervisors worldwide with the necessary tools to address and mitigate gaps in coverage for the consumers we seek to protect. Closing the protection gap, again, it is not a one-day event. It is not a one-year event. It takes patient determination. Determination to do the difficult work no matter the obstacles, but what's happening here today and tomorrow should help give us the confidence we need to achieve our goals. And if you glance at the news, read, whether it's, I don't know, there's still some people who use paper, if it's on your tablet, if it's through social media, but a quick glance at the news and you will be buried with plenty of stories about what divides us as a country, what divides us as a people, what divides us as a world. But luckily, there are still those who are committed to working together and can appreciate differences as a source of strength. And here I'm going to say, you take a look at the NAIC. I mentioned the climate resilience strategy. That was spearheaded by Alaska and California, two states that are so very different. But what we did was we found common ground in protecting consumers. We found within ourselves the desire, the ability to overcome any obstacles, because that is why we are here. We are here to protect consumers, and to do that requires unity, and that's why here, as we look around in this one hotel ballroom today, we have gathered from across the world all varieties of perspectives and experiences in that common cause to improve lives and to build a better future. Collaboration builds strength. And as our challenges increase, so does our commitment to working together. The recently concluded NAIC Spring Virtual International Fellows Program offers another example. It drew more than 160 insurance supervisors from 6 continents and 39 jurisdictions, including, I'm happy to say, 7 new jurisdictions for our information sharing and relationship building training sessions. That marks a 300% increase from last spring. And in total, with our virtual and in-person sessions, we've had more than 1,000 fellows participate over the course of the program's 20 years. International collaboration and coordination involves lots of back and forth, and the road is not always straight or smooth. For example, following the global financial crisis, financial sector supervisors looked for ways to avoid getting into the same situation again. The IIS initially created a methodology to identify and to have certain requirements for GSIs, globally systemically important insurers, but it became apparent that an entity-only approach was not appropriate for our sector. In response, the IIS members developed and are implementing the holistic framework, which looks at both entities and activities. It examines potential risks and solutions, and as a result, we have a framework to address systemic risk that works better for the global insurance community. Work of the IIS on the insurance capital standard and the comparability assessment for our own aggregation method is another example. Initial work on the ICS began over a decade ago, and I'm sure we're all happy to know the project is in its final lap, with the ICS to be finalized and a determination on comparability due before year-end. It's been a big topic at this forum. Over recent years of this forum, you've heard from my fellow commissioners and our colleagues of the Federal Reserve and at the Treasury Department with concerns with the ICS. and how it will not work for our insurance market. It may work for other insurance jurisdictions, but it does not accurately reflect the capital adequacy and risk assessment of US-based internationally active insurance groups. Implementing such an approach would not work with our supervisory regime. It would create an on-level playing field between our IAIGs and non-IAIGs and would impact the ability of insurers to offer certain products to US insurance consumers, and that could widen the protection gap and lead to financial exclusion rather than inclusion. Challenge, clearly. But recognizing the importance of moving forward collectively, the IAIS established a process for assessing whether the aggregation method provides comparable outcomes to the insurance capital standards. The high-level principles and criteria serve as a basis for a robust technical process that should neither preclude comparability from the outset nor give it a free pass. That assessment is underway, and we appreciate the participation of our volunteers here in the US, and certainly the hard work by the IAIS Secretariat Assessment Team. We have remained committed to the agreed-upon process, and I think our other IAIS members feel the same way. We look forward to a successful conclusion of the comparability assessment, which would reflect the reality of what supervisory colleges, covered agreements, and reciprocal jurisdiction processes already do. Recognize that different approaches can provide similar outcomes for group capital adequacy and supervision. And as the work on comparability continues, we will also be considering the results of the public consultation on the candidate ICS and the economic impact assessment. Ultimately, as IAIS members, we all need to ensure the final version of the ICS and any potential optionality are fit for purpose in order to be approved. Again, we appreciate the time, the effort, the resources, the dedication of everyone who's been a part of this key project. The IAIS has come so far with this, and we will collectively cross the finish line on this project, given the value placed on international collaboration and coordination. As we look ahead to the next day and a half and beyond, I hope this forum, this meeting, and the people you meet outside the room, the discussions, I hope they will not only equip, but also excite and energize you to make a lasting impact. We don't want to just keep up with an evolving world. We want to continue to lead the way forward together. Thank you.